welcome back to this week's market update. Today is Monday, March 4th, 2023. We had a great week, so we'll jump right into our market update. So, taking a look at our market performance from last week, we saw the S&P 500 as well as the Nasdaq Composite reach all-time highs last week, with the Nasdaq hitting its first all-time high since 2021. The PCE data came in as expected, showing a 2.4% inflation rate, the Fed's preferred metric, so that was great news on that front, coming in as expected. When we look at the market data for last week, we saw the Nasdaq up 1.7% on the week, the S&P 500 up just about 1%, the Dow Jones Industrial Average positive slightly for the week, and then the Barclays Ag just ever so slightly negative on the week. Heading into our economic data of the week, we got the PCE inflation report for the month of January last week, putting headline PCE at 2.4% from a year ago and core PCE at 2.8% from a year ago. So you can definitely see a large moderation in the rate of inflation since that peak in summer of 2022. Then on a monthly basis, we saw a 0.3% rise in headline PCE and a 0.4% rise on a monthly basis on that core PCE number. So this was actually on core PCE the highest monthly increase since January of 2023, although it was priced into the expectations. So nothing to be too much concerned of right there. But as we approach this 2% inflation rate, what is the Fed going to do? How are they going to cut rates? How soon? These are the questions that investors are thinking about when we're looking at this inflationary data. Alongside the monthly PCE report, we also get some great data on personal income, spending, and saving for the same month. So we saw personal income actually rise much more than expectations at a monthly gain of 1% in January, surpassing the estimate of 0.3%, so almost 3 times the expected monthly gain. But we saw disposable personal income, which accounts for the after-tax income, it only increased 0.3% month-over-month. So still a great gain there, but more modest when we look at the after-tax impacts of income growth. Then when we look at personal spending, that actually declined by 0.1% month-over-month, so that was a bit weaker. We saw income increase month-over-month, but personal spending actually fall slightly in January, but that's not too uncharacteristic of January as consumers kind of scale back after the holiday season. But then when we look at personal outlays, which includes this personal spending here, as well as interest payments and transfer payments, that actually increased 0.3% month-over-month. So great information there. And then finally, we saw the personal savings rate see a small increase to 3.8% in January. Overall, as we look at this, a higher month of income, scaled back spending overall, and then slightly more saving in January. Moving along through our week here, we also got durable goods orders for the month of January, but before we look at this month's data, I wanted to make a quick note that the durable goods category as a whole comprises 5 to 10% of total GDP in any given quarter. So when we look at this durable goods data on a monthly basis, that's kind of one of the biggest factors, one of the biggest categories in GDP that comprises what economic growth looks like as a composite. So one of the many reasons why we look at this every month here, but just want to make that note as we see January's data. January showed a 6.1% drop month over month compared to the 5% drop that was expected. So quite a big decline month over month. That was led by the transportation category. So transportation equipment within that category in specific was down 16.2% month over month. So when we exclude transportation as a whole in this composite, durable goods was only down 0.3% in January. So just want to take note of that. It is quite a big drop here, but again, that was mostly led by transportation equipment. But as we look at kind of the bigger picture, this feeds into a large portion of GDP. So when we see this big of a drop, it is important to note that that could have implications for our Q1 GDP report, which should come out in April. Also this week, we got the February Consumer Confidence Index showing a 3.8% decline month over month versus the 3.8% rise that was expected in the index. You can see that decline right there following a few months of positive consumer confidence growth. Looking at the demographics of the respondents, though, it was pretty widespread, impacting all income groups except for households earning less than 15,000, as well as those earning more than 125,000 a year. So, kind of the middle America saw this decline in consumer confidence in February. And then when we look at the write-in responses, it seems that consumers continue to be occupied with inflation, although there was a bit of alleviation in concerns over food and gas prices. On the other hand, respondents in the survey expressed growing concerns about the labor market situation, kind of the more difficulty they're seeing in getting new jobs, as well as the political environment in the US, especially in this election year. So, good stuff here as we look at how consumers are feeling about the economy. One final update this week as we look at market performance, you might have noticed that Bitcoin was rallying quite a bit, actually reached the 60,000 mark and is still above it as of today, March 4th. So, quite a bit of a rally in Bitcoin. We've seen it go from 44,000 at the start of the year to again above 60,000 now. And what has caused that? I think personally it is two things. So, the first thing is the introduction of the spot Bitcoin ETFs that were approved by the SEC this year. And then the other thing coming up here is the Bitcoin halving. So, what is a halving? Essentially, in Bitcoin's rules, every 4 years, the reward that Bitcoin miners get will decrease by half. So, that occurred every 4 years in the last few years since its inception in 2009, and that's expected to happen again in April this year. So that oftentimes is kind of seen as a limiting of the supply, which can lead to increased demand and then driving the price of Bitcoin up. So that kind of answers why are we seeing this rally. Will it continue? Honestly, don't know. We don't know. It's a very speculative asset, but it's interesting to see what are the things driving the rally of Bitcoin. We thank you very much for tuning in to our weekly market update, and we look forward to providing another update next week. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.